Hey traders and investors, it's Serge Berger here. Over the past couple days, not surprisingly, I received a lot of questions on Tesla. Tesla, of course, just reported earnings, and as such, I want to show you guys a little trick for looking at a stock like Tesla that has essentially been in a free fall and how we can measure it and see where we might find a better spot to buy it. And not so much from a horizontal or diagonal support perspective, but really something that has more to do with a near-term moving averages that you can use. So very straightforward, and I think it's worth you guys looking at this. So if we just keep the medium term moving average here for a minute, you can see obviously those are way up high, still very far removed. So the stock arguably from this perspective is very much extended from these moving averages and arguably should bounce a little bit or at least stop the free falling process and let these moving averages catch up. If we now, however, use my favorite near-term moving averages, which are 8 and 20 one-day simple moving averages, the 8-day moving average being in blue, the 21-day being in yellow, you'll see that the stock is actually hasn't just traded below the 21-day moving average since gapping lower on the first trading day of 2016, but it's also actually managed to stay below the 8-day moving average, except for one day. It's managed to stay below that moving average the entire time. That is a pretty long feat for a stock like Tesla. So very simply, and you can see as if I'm recording this right now, the stock has actually managed to once again reject this 8-day moving average. As of right now, of course, that can change very quickly. But what I am looking at is I'm looking for this stock to start building a bit of a base and get back at least above the 8-day moving average. Because once it does that, it might then just be enough for some active investors to have a little bit of faith again into stock on the long side, and in fact, the shorts to get scared. That's been a real great play of the shorts, looking at this 8-day moving average. Every time it gets up there, they start selling it. If the stock can establish a little bit above there, which in this case, as of right now, would mean the stock getting at least above, say, the 163, 164 area and establishing above there, then I would think the shorts could get scared pretty quickly and get the stock moving right back towards the 190s without low 190s at least without too much hassle. So that's a very simple way of looking at these type of momentum stocks when they start losing upside momentum and they get into the downward press, then this is not an uncommon phenomena. But when they do then finally get back above the 8-day moving average and ultimately maybe even above the 21-day, that's when the shorts get real scared and there's a potential for real sharp short squeeze bounces. So that's what I want to go through today. Please like this video. That's how I move up in the YouTube ranks. Subscribe to my channel, and I'll see you in the next video.